Hello, everyone. Happy Sunday. This is Simon with AvaTrade. And first of all, I wanted to apologize for sounding this funny. I'm a little bit under the weather, but nothing serious. And just wanted to share with you a good recipe, which is tea with lemon, ginger, and honey. It works. Also, chicken soup works for me. So the past couple of days, I've been popping that medicine in, and I think I feel a little bit better. Anyway, I'm very happy that we're here today, and it's going to be an amazing week. I always say it so you can say, okay, the guy is saying the same thing again and again. But every week is amazing, and this week we have some events that are coming out, and we'll be talking about it. So, first things first. Um, to new people, this is me, Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading for close to 23 years. So June 1st, I started as a proprietary trader back on Wall Street. I did it for about 11 years, and then I moved away from that intense professional day trading, and I started to mentor and educate other traders. And of course, I'm trading until today, which is my biggest passion, I would say. Agenda of the webinar. First of all, for new people, special welcome, of course. And the idea of the webinar is to create structure, to have a plan. And as I always say, I'm quoting somebody, it's not my quote. You plan your trade and you trade your plan after. So that's kind of keeps us away from troubles, because if you do things in an organized way, you are organized in all the aspects, and that includes managing risks and managing your money and having plans as far as your trading. So the agenda is usually the same. We talk about indices, stocks, commodities, and Forex. And these are the channels that I highly recommend that you use. You have Telegram, you have Twitter, and my favorite YouTube channel. A lot of you are watching webinars that are being recorded and posted there if you missed the live webinar. And besides that, there's a lot of information there that includes trading analysis and things that are being added by a lot of my colleagues. You have tutorials and platforms and more, a lot of more things to follow up. You can subscribe to it. You can hit that bell so you'll be notified when new things are coming up. Risk warning. Of course, everything we do here is purely educational. We don't suggest anything. You can find a full document at avatrade.com. So a few things that I'll be talking to you about. Some announcements that did come out last week, some announcements that are coming out the upcoming week. General mood in the market. We'll go through indices, we'll go through a few stocks. We also go through commodities and see how they worked out last week and what to expect in upcoming week. And we'll wrap it up with looking at Bitcoin. So as you know, I like to bring the slides. This is from marketwatch.com, and I just took a snapshot of it. And it says right here, look for stocks to lose 30% from here, says strategist David Rosenberg. And don't even think about turning bullish until 2024. And I guess this is the general mood, even though the market has been very strong. We had a strong January. And if you remember, I mentioned to you, based on analysts, we had NASDAQ posting the strongest results since 2001, and they give an example that strong January was followed by a huge fall of the market, and that was the bubble bursting. So let's see what we will have. Let's take a look at the economic calendar. Before that, okay, you know what? Let's take a look at this. So we have GDP numbers from Japan. That's Monday, and again, a few words about economic calendar. What I do here, I just take the high impact events. There's much more happening. You can look into it. You have economic calendar, which is showing details, including some analytics on our web trader and the and the app that you use with us, and also there are other providers that present the upcoming events. And I personally think that knowing about these events are very important, whether you believe in it or you follow it or you make your predictions on it. That's a different story. But I look at it in a very simple way. I cannot predict what the announcement will show, and even if I knew, as I always say, I wouldn't know how the market will react to it. It's totally unknown in this market and global conditions that we are. But nevertheless, knowing that certain things are coming out in certain times, it's very important. So we as traders don't get caught on things that we didn't expect. So some people like to trade the news. Some people like to stay away from the news. There's different approach. So on Tuesday we have the unemployment data from UK. We have European Union posting GDP numbers, and this is the key data of the week, consumer price index. There are a few others, but it's all about CPI, and that is something that number one focus of Feds, besides what the economy is doing and unemployment and employment levels. This is the most important out of three, because the main fight, the main battle is to bring the inflation lower. And this number is going to be very important. The market is expecting to see a strong reaction. And of course, in a logical way, if inflation doesn't show slowdown, that means the Fed will continue being more aggressive in increasing interest rate, and that would bring the equity market, especially the tech stocks, down, and that would increase the value of the dollar, and vice versa. So this is on Tuesday. On Wednesday, we have Governor of Bank of Australia speaking. We have a consumer price index from UK, and retail sales are very important. Last month report, when it came, it actually hit the market. The report, if I remember, was lower than expected, and together with the PPI numbers, the market reacted to it in a negative way. So that's on Wednesday. And Thursday, we have employment data from Australia and another speech by Governor of Bank of Australia. That's as far as the economic calendar. Now, important things, something that already happened in the past week, few things. There was an announcement, first of all, to add just to this, about 60 stocks out of S&P 500 reporting this week. I'm not going to go through them. You can find, if you're trading the stocks, and you can just Google stocks that are reporting this week and go through it and find what are the stocks that are on your watch list. So a few things this week. First of all, very interesting. It was kind of surprised, reported by Nikkei, that the next Bank of Japan governor will be, and I'm not so good with pronouncing foreign names. His name is Kazuo Ueda, and everybody was expecting to have another one whose name is Masayoshi Amamiya. Masayoshi Amamiya, who was expected to be doge, but this guy Kazuo Ueda, who's apparently going to replace the current governor Kuroda, he is actually taking this position on April 8th. And the current governor, Haruhiko Kuroda, has been in this position from March 20th, 2013. And he's been keeping the rates where they are, as other central banks are really have been increasing interest rate. The Bank of Japan hasn't done anything. So the first reaction was very positive reaction, even though he only takes the position on April. I just researched that April 8th, but market reacted to it. So we'll take a look at Japanese yen when we get to it. So that's one of the announcements. Another one was announcement by Russia, as the world is trying to squeeze Russia, to cut the profits. So less money will go into the war, and hopefully that will choke the war. I hope it will happen soon. So European Union, they banned the imports of seaborne Russian oil together with the G7 group, and they also joined the cap on price on the oil. And in response to that, Russia announced that they will cut the production by 5%, and that's the cut of output by 500,000 barrels a day. And they will start it in March. So oil reacted to it. Oil prices went up. We'll take a look at the moment as well. So these are the important things that that happened. And again, the upcoming important things, the most important thing, that's the CPI data that we just spoke about. Okay, let's take a look at the markets, and we'll start with indices as usual. And I would like to start with China. As you remember, we are fighting this 13,500. We came back to retest it after this recent run, and it looks like we are continuing fighting to this level. There's a lot of accumulation going on. It's also a 50 moving average. And let's see, I think this week, the CPI numbers, of course, will affect, first of all, the US indices, but global indices will be affected as well. And China has been sitting here. So far, we're holding this level as a support. Just to remind you, it was a resistance from which was sold. It took us a long journey until we finally broke above it in the beginning of January. And then we continued running, and then we came right back to retest this level. So far, it's holding support over here. Hong Kong, it's kind of parallel to Chinese index as well. It's been holding this around 21,000, also trying to either break to the downside or accumulate and continue higher. We'll find out soon. And Nikkei. Nikkei had a move up and down. It was a big range on that news on the new governor coming in, and we actually ended up flat on the day. The open was 27,575, and the close was 27,580 by 5 points. Again, pretty much flat day. Now, U.S. indices. We had a big fall on Wednesday and Thursday on S&Ps, and Friday we had a little bit of a gain. But take a look where we are with on Friday, as low as 40.60.5, and then we bounced a little bit. So we are holding this level around 40.91. As you could see, there was a resistance, and it looks like we're building the support there for now. So that's S&Ps. Dow Jones was the strongest, and interestingly enough, when it comes fear of stronger dollar, the Dow Jones is being affected the least, and Nasdaq the most. So we'll take a look at Nasdaq. Now, in general, the second flat week for the indices, as you could see, and Friday we bounce off 50 moving average on the Dow, and Nasdaq, what I mentioned to you, is the weakest. As we're getting closer to that data, and with the Feds possibly pushing that end of increase of the interest rate, Nasdaq or the tech stocks are being hurt the most. So we had a nice run again, nice run in January, and Nasdaq's being the weakest out of 3 US indices. And if you take a look over here on a daily chart, we closed on Friday below this mark over here. That was back in mid of December, the 12,383.5, from which we sold, and we're back to that level. We tested it on Thursday and Friday. We closed below. So let's see what this upcoming week will bring. UK, after an all-time run, we are actually holding these levels over here. It's holding strongly. We're not running any higher. We're not falling. So I guess this week will show. And again, to repeat myself, the CPI numbers from US will affect the US, and also we have CPI numbers from UK, if you remember, went through economic calendar. So we are in the very crucial level here. We're at the all-time highs on on FTSE on UK index. German DAX, it was a negative week overall. We kind of double tested this previous high, and we failed to go higher. So let's see what this week will bring. French index, similar idea. We made a nice move to the upside, and we are holding here. So it looks like the markets are just really staying put and waiting for that run of data this week. And the main one is the CPI numbers. Nifty 50, if you remember, we mentioned it that it will probably pull in, and it did. And so far, it doesn't really bounce. We did break through this trend line, and we're holding lower. So let's see what's next on Nifty. And that's pretty much with indices. So again, we just established that after making a nice move, especially European ones, they're waiting, and the US indices are also waiting for that data release, and Nasdaq being the weakest out of three. Let's move on now to a few stocks, and I wanted to bring Google up, and it's all about the artificial intelligence these days. And I told you the truth, I haven't really followed up a lot on it, but the other day, one of my colleagues showed it to me. I think it's called Chat GPS, or I might be mistaken, when you can just type the question and get a detailed answer, and that's really an amazing thing. Microsoft has been investing, I think, a lot of money. I think one of the companies invested $10 billion. And Google has been suffering a little bit because it's kind of behind on that technology, even though they're looking to announce something or bring something to their search engine and so on. But take a look. I was wondering why Google is really falling, and it looks like they are a little bit behind of that or on using that technology. So a lot of buzz, is being made about those AI companies, and I think we're going to hear more about them, and more funds probably will be looking to getting into that business. So that's Google. Big story was Lyft. We don't have them on MT4. MT5 has Lyft, I think. But Uber actually reported pretty good news. But Friday gapped down and is sold out on Lyft. Surprised missing of the earnings. Lyft stock went down on Friday 36%. And Uber, I guess, in sympathy with it, went down 4.4%. Now, Uber looks attractive to some investors. Some banks, brokerage houses, they increased the target price. Goldman Sachs has a target price of $47. UBS has $48 target on Uber. So I guess we'll be seeing it. And it makes sense because that's where the whole fall started here. So maybe they're expecting Uber to climb all the way to this $47, $48. But nevertheless, on that Lyft stock falling terribly on Friday, Uber went down with it as well. Netflix, it's been having not such a great week, and we were trying to break the previous week's low. Let's take a look. 348.49, and here we actually went below the previous week. So this could be the trigger, and we did, as you could see over here, we did break through previous weeks. This is the daily chart, and let's see if we actually continue sliding. If we do, we might actually go and maybe retest at least the 50 moving average. And again, that depends on the total market conditions, and see what happens. Disney had not such a terrible earnings, and the stock actually gapped up because they're doing restructuring. The former CEO coming back, He does a great job restructuring, and they have a plan to lay off a lot of people and save money and so on. So market took it in a positive way, but I guess then the traders changed their mind, and the stock just went down. Maybe it's just the falling of the market on Thursday that caused it. I guess we'll see what happens later on. Now, on the oil price, we'll take a look at oil in a moment. Two stocks acted in a different way. ExxonMobil actually moved higher on that oil spike to the upside, and Chevron didn't really do much. So it's important to notice that, because when the oil reacted to the upside, one was strong and one was not. So let's see if the turnaround will happen. I guess the loser will fall faster. Just an observation on the relative strength. Pfizer is another one to pay attention to. If you remember, we mentioned that analysts are looking into it. Said the stock is undervalued and there's a nice potential because there's a lot of things in the pipeline besides the COVID vaccination and other things. So if you take a look at a weekly chart, last week we closed lower but higher than the previous one. And on the daily chart, Friday was a very nice positive day for Pfizer. And we bounced off this support of 42.85 that we had previously. So it could be that Pfizer might gain some momentum over here. And the big players, Amazon sold out. Apple, as you could see, it come to this magic level 150 that's always struggling with. So it looks like the market is waiting for some events, and of course we know what the CPI numbers are coming up. So we'll be watching that. And Tesla stock didn't really manage to hold that 200 mark. We had a nice run, and we went actually as high as 230, almost $214, ended up closing below 200. So let's see what happens. If you take a look here, that 199, 200 was a level of resistance. This is the 4-hour chart, and we did close below it. So let's see how we act in the upcoming week on Tesla. Again, depends on what the market is doing in general. We'll be watching that. Let's move to commodities, and we'll start with oil. As I mentioned, oil had a nice run since that announcement of Russian cutting of production. We still didn't reach this level of resistance. So if this mood continues, the first checkpoint would be around here, 82.5. We'll check if that resistance is still holding. If not, we'll continue higher. And of course, it's a very nice channel. It's a very solid channel. We're trading in between $72 and 82.5, about $10.5. We've been really accumulating here. So interestingly enough, that all this accumulation is happening after the fall. So definitely the oil is preparing for something. We could have a move higher, or we can move lower. How genius I am, right? Two scenarios, genius. Anyway, after this fall, we really have a big, this is a weekly chart just to show you. We're accumulating a lot over here, and let's see what happens. The Feds and the analysts are predicting that we might have this soft landing, kind of avoiding recession, and maybe that could be positive for oil including. And the Russians announcing it, it's just showing a little bit of a shortage on the supply. Let's see how demand will play. Now we have to watch China. As you could see, the China went down, and definitely something is happening here. I can't predict anything. If I could, I wouldn't tell it. But definitely something is cooking in crude oil over here. Let's talk about natural gas. And congratulations is to natural gas. Finally, we are seeing a green week after 1, 2, 3, 4, 5, 6, 7, 8 straight weeks to the downside, the first green week. And I've been talking about natural gas every week, as you know. It's been disappointing buyers at each level. We thought that 490 would hold. They thought what $4 would hold. Then we thought the 340 would hold, and so on. 310. Every level, the buyers got excited about this being the bottom. They got hurt. So it looks like this fight is the longest one. This is the daily chart. 1, 2, 3, 4, 5, 6, 7. 6, 7 days we've been trying to break through this level, and we couldn't. So on the 3rd of February, the low was 234, and we had the spike below it on Thursday, I believe. Fake breakout. Low 234.9. No, we didn't break that low. So 234, 235 was the bottom, and it looked like we're bouncing here. And it looks very nice. And if you take a 30-minute chart, it starts really showing the pattern of higher lows and higher highs. And we continued, and we did close on the high of the day. Let's see. The high of the day was 258.6, and the close was 258. So we closed at the high. It's very nice. It's a good sign. Again, I don't want to be biased here, but we might actually see that start of moving to the upside natural gas. And the way the traders look at it, it's about the risk reward. So you have the price is at 258, the low was 234. So the 25 cents, the quarter is the risk, and potential high could be anything, could be double, triple, quadruple, and so on. And for traders, that's a good scenario. So that's as far as oil and natural gas. Gold has been super weak on the stronger dollar, and the yields of the US 10-year bonds went up, especially the announcements from Japan of new governor coming in also affected it. So gold sold out, and the dollar got stronger. Let me just show you dollar really quick. We'll get to it. So as you can see, it's the kind of a mirror image where it went higher and we're pausing maybe for continuation. And on gold is the opposite. We went lower and we're pausing maybe for continuation. So that's as far as gold. Palladium looks very interesting. I want to bring it up. Sometimes I do. I just took a look at the chart. Sorry, I'm a little bit slow today. Palladium. So few things. We just hit, if you could see on the daily chart, we just hit the trend line. So sometimes traders pay attention to it. We might actually bounce from here. And on the weekly chart, we just went a little bit below this support that we had. That was December 12th, 2021, a while ago, from which we made a new high. So it kind of shows that we might actually find some strength around here. So we'll be paying attention to palladium in this upcoming week. Now, soft commodities had a nice move. Wheat, if you remember, wheat had a multiple test of this level 724, and then we built support around 250, looks like it, and then Friday we shoot up. So also very interesting what wheat is going to do next. Will we break the previous resistance? Will we continue higher? We'll continue to actually watch wheat. Corn also shot up on Friday, broke the previous 2 days highs, and soybeans as well. Soybeans looks very nice as it made higher lows, and it was pushing through this resistance here that we might see actually it finally breaking it, and that will bring it to a really empty space, so could go anywhere higher than that. So soft commodities we'll be watching in the upcoming week. as well. Now, let's move to Forex, and we'll start with Canadian dollar. As you know, or some of you might know, that oil is being affecting Canadian dollar. Canadian dollar is very sensitive to oil prices. Canada is one of the producers and sellers or exporters of it. And with the oil going higher recently, Canadian dollar moved higher. And if you take USD against Canadian dollar, let's take a look in a moment. Apologize, my sinus is slowing my brain, I guess. Okay, so USD CAD sold out on that strength of Canadian dollar, and was a lot of action here on this 133, 134 level. And let's see, we approaching the 200 moving average. But against other currencies, Canadian dollar was super strong, and it's worth actually watching this all week. All the other currencies, Australian dollar, super weak. Euro, I guess, is the weakest against Canadian dollar. Take a look at this move, and we're also hitting this recent support here. Pound also on the edge of breaking it or holding it. Take a look. We're actually at the very serious strategic level here. We bounced from here, we almost hit that level, and we bounced last time from around here. Okay, so important to watch. New Zealand dollar, the same thing. So most of the currencies against Canadian dollar are at the very serious levels that we can break and continue lower should the oil prices continue higher this upcoming week. And so Canadian dollar will be in focus. We'll be watching Canadian dollar in connection with prices of oil. This is the key level. And of course, the yen, as that announcement came out, yen reacted in a very positive way. As you could see, we had spikes. We didn't really close lower, but the spikes where there was a lot of volatility on that. So any pairs with Japanese yen also worth watching in upcoming days and weeks, as we're waiting for that April 8th when new governor will be appointed to the Bank of Japan. So that's as far as the currency, and take a look. Let's take a look at Bitcoin for dessert. Where's our Bitcoin? There you go. So as you know, I always mention that Bitcoin is very sensitive to US dollar and very sensitive to equities. So as the equities sold and dollar got stronger, we just broke easily through this 22.5 level. And if you remember, I mentioned that we've been, in order for Bitcoin to go higher, we need to break 25.5. And we've been in this channel between 22.5 and 25.5. Finally, we broke through it, and we are trading lower. So could be anything. We can come and retest 22.5, and we can continue and retest 20 and lower. By the way, there are articles, including on the Market Watch, that they say that the fair value of Bitcoin is about $27 based on this model. It's a complicated thing. I wouldn't be able to explain it, so I wouldn't start and try. But you can read it. They calculated certain things about Bitcoin, and these scientists or analysts are saying that the current value of Bitcoin, a fair value of Bitcoin, is about 27,000. And I wouldn't be surprised if people reacting to it will be selling it, because even if you go to 27, it's not really a huge thing. And people that own Bitcoin from much higher levels, from 60,000, almost 70,000, 40, 50, they're already in a huge loss. So again, really don't know how Bitcoin will end up, but just that knowledge or information that the fair value is 27, that's not so positive for Bitcoin. And at the same time, the opposite direction, the Kathy Woods fund manager, she's very in love with Bitcoin. She still expects Bitcoin to go to, I believe, 250,000. I don't know if she's dreaming or she knows something. I guess we'll find out. Again, I want to thank everyone for joining us today. And I apologize for not being 100% today. I hope this will help you in the upcoming week. Enjoy the weekend, get energy for the upcoming week. It's going to be a lot of actions, a lot of volatility. The Feds are really watching this a bunch of data, especially the CPI numbers. And we'll be back next week. All the best. Take care of yourself.